You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. Welcome to Volatility Views, your premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you folks are mainlining these days. Remember, of course, top of the show, a couple of reminders. First off, if you're not listening to the full network, wherever you're getting your favorite podcast, you are missing out. Like the Flowmaster's live reaction to the madness yesterday from SIBO proper, or perhaps his attempts to give me the hantavirus. All kinds of stuff was going on live yesterday on the show. So make sure you're checking out the option block, as well as, of course, everything else popping off on the network. And, of course, if you want to join us for the official, it's now official, we've dubbed it, the official after party of Volatility Views, known around the globe as Options Oddities. Only place to get it, theoptionsinsider.com/pro. is the place to go to learn more. As we go around the horn, see who's joining us today. Once again, we have the traveling man about the Vol town. And he did warn us. He did warn us when he went across the pond. All hell might break loose. Yes, of course, I am talking about the once future and present Dr. Vix, a.k.a. Mr. Russell Rhoads, beaming in from the mecca of meat pies and fish and chips, known as London, Mr. Rhoads. Welcome back to Volatility Views. How goes your trip across the pond, sir?
I'm having a great time over here. I'm actually, I'm doing double duty. I went to a conference, but I've also got my lovely bride with me. It's our 24th anniversary. And she just about jumped out of her chair and throttled you because you called me Mr. instead of Doctor. I could care less, but...
Don't you know you're the once future and present Dr. Vix?
Yeah, she suffered through the blood, sweat, and tears of the 17 or 18 years that it took me to get that damn thing. And she feels like I need to have that little doctor.
And she should also know that I dubbed you doctor many years before you were an official doctor.
You were the first one.
I'm about 5 years plus on doctoring you.
Yeah, you probably planted the seed that made me do that. So there. But yeah, I'm over here. I'm at the... It's kind of interesting because when you're at a conference, typically the kind of conferences that we mostly go to, and this one's a bit different, but typically if you're having a week like this, you start going to the presentations and there are fewer and fewer and fewer people. And that was not the case here, and that's because the quant minds / risk minds, which are two different tracks, it's mostly academic / practitioner folks, kind of like myself, that have a foot in both worlds. Like I was hanging out at the S&P booth, And one of the guys said, "Why are there so many academics here?" And I was explaining that, there are tracks that were nothing but academic papers about, and there was one about zero DTE, which I cannot wait to share a little bit later with you guys. But with all the market volatility that was going on, it really didn't impact the thing that I was at. If I don't, did you venture around FIA in Chicago this past week?
I was there. I can give you my thoughts on that if you like as well. But
no, I'm just kind of curious if all of a sudden, because with all hell breaking loose, as you put it, if maybe things started to thin out a bit. I've been at conferences where that's happened when it seems like every time I go to a conference, all hell breaks loose, which, by the way, first week of February, that's the next one, guys.
Oh, we'll plan it on our calendar accordingly. Luckily, FIA, or maybe not luckily, FIA was Monday and Tuesday, so they kind of missed the lion's share of the madness. If it was Thursday, it might have been a different story. Speaking of Thursday and all those wild stories, let's just get to it now, listeners. It is time for the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down the week that was, and indeed still is. From a vol trading and trending and analysis and unusual activity, all sorts of fun perspectives out there. And man, what a week to get some vol perspectives out here, including yesterday, just the mother of all days in many regards, historic in some regards, not historic in others. We'll get to all that fun in a second. But coming in today, there was an open question as to just what the hell kind of day we were going to have today. And so far, looks like the bulls have it. S&P up nearly 1%, Dow up about 1.25%, NASDAQ up a little bit shy of 0.75%. So NASDAQ, a rare day, playing the laggard role today. VIX cash coming back to earth slightly, about a 24, off about almost 2.5 points from where it went out. Of course, that still puts it, actually it was right around 23.75 when we kicked off the show. That still puts it up 4 points from where we were this time last week. And obviously we got a lot higher intra-week, which is wild. There was a moment there today I thought we were going to have the logins. In fact, we're only about a point from the logins right now. He may make an appearance. He is locked in the green room eating those stale Ritz crackers. He could emerge at any moment. Our old pal Volley, Mr. Scott Nation's Just the Facts Ma'am, Vol Edition, 1965, a heck of a year, up 2.8 points from where it was this time last week. And VVIX, our old pal VVIX, at a whopping 123. We're starting to sniff those old pandemic levels again, which is interesting. Up 16 points. It got higher, obviously, intra-week. Looks like it topped out around 130, 131, somewhere in that ballpark. So again, pretty lofty levels. Back in the pre-pandemic times, back in the before times, when VVIX would hit about a 125, that was usually the upper band for it. It could get a little bit above it, but usually you would start drifting back to earth. Post-pandemic, who knows? All bets are off. And of course, this is on the heels of a lot of tumult throughout the rest of the week, including yesterday, Thursday, just an absolutely wild day out there. I happened to be recording the option block live at SIBO while all this madness was popping off. Of course, yesterday seemed like the day after a lot of red on the screen, a lot of concerns about valuation in the AI sector in particular, and of course, crypto taking a pretty aggressive downturn as well. It seemed like NVIDIA was going to be the white knight for Wall Street this week. They, yet again, reported blockbuster numbers on Wednesday night. Came into Thursday, markets were liking what they were seeing. Everything was green. All was right with the world. Vol was coming back to earth. And then I left our Chicago studio to go down the street to the new SIBO offices, which are even closer to our Chicago studio. Round trip, all of that with the gear and everything getting set up with the Flowmaster. Less than half an hour. And in that time, listeners, the S&P went from up about 1%, somewhere in that ballpark, to red, and then it was off 0.5%. Then as we started recording the show, it was off over 1, about 1.25%. So absolutely wild swings. Then it seemed like we were going to whipsaw again and go green again, then back red. Absolutely wild stuff. So yesterday, just a historic day in many regards. Definitely historic in SPY options. Set a record in SPY options. Came close and a lot of other products out there. If you want to check out some of those records, make sure you're checking out the Hot Options Report on the network. Yet another reason why you should be listening to the full network out there. But Mr. Rhoads, I have more I want to say, but I want to get your thoughts. Obviously, you were across the pond, so it made it a little bit difficult for you to respond in real time to all this. But first off, give us your thoughts as all this mad tumult was unfolding yesterday. And then B, you were at a quant, indeed a vol conference. So what were some of the takeaways from there as all that was unfolding, sir?
Sure. Well, first off, it's funny. I feel like, we've been doing this together so long that we kind of share a brain on it. I pull up the VVIX chart, I think 3.5 seconds before you mention it. And it's interesting that it doesn't look like people are monetizing too much so far. Now, when I talk about weeklies, I'm going to talk about a couple of big monetization trades, but I'm always looking, tick by tick with VVIX versus VIX to see if maybe some of those smart vol traders out there are starting to put some big sell orders in, putting a little pressure on VVIX before VIX starts to make the turn. And that really has not been the case the past couple of days. They're practically moving in sync with each other. And divergences are kind of one of the things that I think tells a story when we're looking at the volatility markets. I don't think we talk too much about VVIX versus VIX divergences, and I have a little note. Work on this on the plane tomorrow. So maybe I'll come up with something kind of cool within that space. The activity just seems to be off the charts, and I don't think there are a lot of VIX day traders out there, but this would have been a VIX day trader's dream this week. Just the way that it's flip-flop back and forth. And when I say that, if I were going to day trade VIX, every week when I do this, I sit here and I pull up, a 5-day chart, 15-minute bars, and there are a couple of whack-a-mole opportunities there. They just and people do seem to be taking advantage of them. We had one on Tuesday when VIX got up above 25. And then, of course, we had one yesterday that came from out of nowhere. And I was like you. I mean, I would go into a session and come out and things had and then check the markets because I was trying to pay attention. You had to pay attention to some of these presentations. Come out and everything had completely changed. I mean, hell, I went to lunch today over here in London and came back and everything had, from the overnight, everything had changed as well. It's just unbelievable how quickly things change, but we tend to have this sort of excess volatility at tops. And, I'm almost embarrassed to talk about, to be bearish on this program because I have been for so long. And I almost feel like I'm talking my book on that one. But it does feel like that excess toppy volatility that seems to be going on. Let me take a drink of water because I'm having trouble.
Yeah, go ahead. I'll buy you some time. It was kind of interesting to be in your old stomping grounds of SIBO proper yesterday, AKA the home of VIX, when all this was going off, because you could see outside the windows of recording a little bit of a hubbub of activity start popping off, which is always fun. We weren't at the trading floor, obviously. We were at the mothership offices, but still kind of interesting nonetheless. A little bit of a buzz in the air whenever VIX starts lighting it up out there, and it certainly was lighting it up yesterday. Like we said, a lot of records out there. I do kind of wish it would have been kind of fun to have had FIA on that day, because just to see the market tumult going on around that crowd is always kind of interesting. I was down there at FIA Boca in March, which is the same crowd, and that was when there was a lot of red on the screen, obviously back then as well, leading into April. And I remember there was a lot of consternation then, so seeing it unfold that day would have certainly been interesting. But there you go, sir. I bought you some time. By the way, you scared me when you said we share a brain, because that means now I have also fallen into a manhole, and now I am recovering.
Oh, gosh, yeah. You don't want to share this brain. Nobody wants in this brain. There's just nobody wants that. So, I was at the Quant Minds conference, which runs 4 days. And I mean, there's some titles of some of the presentations that'll make your head explode right off the bat. But things that people were talking about with respect to, I attended a couple of buy-side panels where they were just talking about clients and how things have been evolving year over year. Said people are in the U.S., they keep looking for more and more specific exposures, and we have the opportunities to get those. We know that from all the different structured products that are starting to be introduced in the U.S. There was one guy that was really funny. He said in the U.S., a cab driver might ask you about gold. He said, you will have cab drivers in London ask you about structured products that they're that commonly used over here. I thought that was pretty interesting. So your solutions, if I, and when I get asked, what would you have done going into this year? And I would have been somewhat wrong. I was saying one of those buffer protect things where you can participate in the upside to a certain point, but you're limiting some of your downside as well. And I would be willing to do that as well. And the point behind more people being involved in customized solutions that do limit some of their downside is that they seem to be a bit more willing to put money to work quicker when we sell-offs. And that might be something that's behind, the continuous buy on weakness that we see. I just found that from the buy side panel. And then there was a presentation on zero DTE, which I cannot wait to follow up with this person. She was with one of the banks over here, and we've got the whole Chatham House rule, so I can't really say who they work for or anything like that. But they had come with if you delta hedge yourself once an hour during the trading day versus selling out of the money puts, you can do extremely well with zero DTE. They just basically compared the way that you might, instead of delta hedging once a day for a month option, doing it once an hour, once a half hour. But it was interesting the way that they framed selling SPX options. They were framing the premium as annualized premiums. Think about that if you multiply the premium by 250 versus the premium on a month.
Well, that's how you appeal to an institutional crowd, right? They want to see the annualized. Yeah. That's how they compare, yeah.
Institutional crowd too, but it was just a slightly different way to think about it, just as a percent of 100 or a percent of. She basically was talking about the S&P 500. So I liked that. It was analyzing short dated positions versus long dated options. Also spent a lot of time talking about how 1, 2, 3, and 4 and 5 day straddles do behave very differently. And that's something that I had picked up on in the past as well. And then just what side seems to be getting run over. They were focused more on 25 delta calls, but I had been using 25 delta for some iron condor work, so I had an idea as to what would work within that space. But that was pretty interesting. And then finally, I kind of liked this one because my doctorate is actually behavioral finance oriented. And I still haven't gotten a good answer on this. They were talking about tail risk and how,
Mr. Rhoads, we are kind of losing you there. Are you there, sir? Mr. Rhoads is having obviously he's beaming in from across the pond. Can you hear me, sir?
I can hear you. Can you hear
me? Now I can hear you. Yeah, let's try a little.
Now you can hear me. Yeah, I turned my signal just popped up to full again.
Yeah, now you sound great again. We missed let's say the last 2 to 3 minutes of what you were saying.
Oh no, because I was freaking brilliant there. I was just talking about the pain the pain feelings behind having tail risks on that don't work for a long period of time versus not having that tail risk on when you need it. And there was a behavioral finance guy that was saying that it's like a 10-to-1 relationship. If the pain that you feel from that 20-30% sell-off versus the pain that you feel from giving up 1% a year because you had a tail hedge position on. So in the long run, you're probably better off dealing with that short-term pain because tail solutions are needed periodically. And he was not. You would think that this was a tail risk manager, but it was not. It was a pension guy. So he wasn't talking his book on that one. But that was the other thing that I found somewhat interesting.
A 4-day quant conference, sir. That is an epic conference in this day and age. Usually these days you get in for 1 full day of sessions. Maybe there's a half a day after that. 4 days, they are committed to the cause, sir.
I'm tired. I'm very tired.
You are up late for us, sir. So we
Yes,
do
I am.
appreciate you had a long day of meat pies and fish and chips, and so you're probably a little worn out from all that. You said zero DTE. Were there any other specific, vol centered presentations?
Not specific to VIX, but more on just different tenors with respect to putting hedges on, et cetera. I'm looking through my notes to see if there's any.
No one did the standard cliche thing of SPY put versus VIX call. They didn't. That's like required for these conferences.
Well, one guy said that he was having to delta hedge every 5 minutes whenever Trump spoke.
It's 5 minutes. That's some aggressive delta hedging.
Yeah, and then what did he refer to? He said, I liked this too. He said using, everybody's very focused on value at risk. And he said that, exactly using options, you specifically, your value at risk. If you're just long options, you know exactly how much you can lose. So your value, you're not, there's not a 5% chance that you're going to lose a certain number. If something doesn't happen, there's a 100% chance you're going to lose a certain number. And I thought that was kind of a different way to think about value at risk as well. And then somebody talked about did a very deep paper on Vega duration, and beyond being able to say Vega duration, that's one I'm gonna have to read his paper like 3 times over, because there's some really high end types, and a lot of these things are a bit more, a bit more on the academic side than the practitioner side. And then finally, this is the one that I really did, the comment that I really did like. If you're putting on a hedge, do not put that you will follow. You've just always got to have a plan ahead of time.
But I think that is a good point. Not one we make that often. The VAR calculation for long premium trading is pretty freaking easy. So I guess from that perspective, that's kind of straightforward and obvious, but we don't say it that often. So there we go. He gets points.
But it's kind of startling to an academic. You mean I could have a specific value at risk?
I paid $5. That's my value at risk. What?
There you go.
What is this madness? I don't need to run 13 models to figure out my value at risk. Yeah, so interesting stuff. I would say there was some of that at FIA, but it's a very different audience out there. It was much more, if you wanted to see how hot prediction markets were, then FIA was the place to be this week. It was standing room only on the main stage talking, all things prediction markets. So that was definitely eye-opening I always knew they were hot, and I could hear behind the scenes that everyone was allocating a lot of capital toward that, but just seeing how much capital is being allocated and how much money is being spent, Mr. Rhoads, to delineate what is a bet versus what is a trade. There's a lot of money living or trying to live in that gray area between the two right now. So
it's a binary option.
Yeah, but
really, that's what the prediction markets are. They don't want to say binary option, much like the option industry wants everybody to think of these instruments as insurance policies and not, speculative contracts. But I have been digging a bit and trying to see if you can find any small arbs between those different markets. You have to assume they're popping up.
Yeah, I'm sure big houses are trying it. On some of the more liquid ones, you probably can. On some of the more esoteric ones, it might be a little bit more challenging. We just saw that paper come out a week or two ago from Columbia saying, 2/3 of the flow on poly market is wash trades. So there's a lot of weird stuff going on behind the scenes on these platforms. But it does seem like a lot of them are angling for the sports side. That is where they see the true growth opportunity. We just got that announcement this week, CME and FanDuel. We already knew they were partnering, but I didn't think CME would go straight into the sports. No, they're going straight into the sports, and it's launching in December, which is kind of wild. So, yeah, a lot of interesting stuff going on to do end runs around local regulation and try to open the binary/event kimono to the masses out there. So whether you want it or not, listeners, the event marketplace is coming soon to a platform and probably an app near you. So wild stuff. Speaking of wild stuff, let's get out to the vol surface this week. Obviously, things were insane most of the week, especially yesterday, whipsawing all over the place. As we come into the end of the week now, obviously, we also had Nove rolling off the board this week. And on top of all the other madness, going on this week. We also had no VIX rolling off the board. So a lot of things compounding the action out here this week. As we come into the end of the week now, Nov is gone. Dees slotting into that pole position. As we're coming into the end of the week, it's still up, but up not quite 2 points from where it was this time last week, about right around 1 3/4 points. Obviously, that's a moving snapshot, listeners. If we wait 5 minutes, it'll be a very different number. So that's where it is right now as we're recording the show here, listeners. Jan future up a little over 1, about 1 1/4 points from where it was this time last week. If you go all the way out to midsummer of next year, listeners, we still top out a little bit north of a 23, about a 23.16, which is, interestingly enough, in spite of all the madness we've seen this week, which is pretty much almost exactly where we topped out last week on that same portion of the curve, slightly higher, I should say. So really kind of interesting. We're not seeing a lot of tumult being priced in going far out the curve. We're really just seeing, as you would expect in these kind of interesting markets, shall we say, a lot of flexing and fluff at the front end of the curve. That said, Mr. Rhoads, what are your thoughts on the vol surface? Was anybody talking term structure over there in London this week?
No, there really wasn't a lot of term structure discussions at all.
What the hell kind of conference are you going to, sir?
It's more of portfolio risk type of situations. And
no, I do love the guy whose presentation was your long premium value at risk is your premium. That just cracks me up.
That's exactly
I love
what
it.
They said. I loved that quote.
That is simple genius.
So, and kind of my point behind the room, that it didn't affect the attendance, et cetera, was these are not day-to-day market people. You know what I mean? There's one person this was the third year in a row they presented, and they are presenting building on the same paper over 3 years.
That sounds like an academic.
It's very academically oriented. So, hey, I had another thought, and I really want to run this one past you. And with respect to the December futures contract, and we've said, or we've been trying to speculate on why it was the outlier relative to what we're used to. A part of me thinks maybe the reason that it was remaining elevated was what happens if the government shutdown comes to an end and we get a slew of economic numbers in a very short period of time?
And maybe people are not liking what they see.
Or just the whole, if we're they're not going to keep the government shut down. Maybe we're shooting for Thanksgiving or something like that. But once they reopen it, and we're seeing this now, you're seeing, them playing catch up with some of the economic numbers. So we're getting more information than we're used to getting in a shorter period of time.
I thought they came out and said some of those numbers that it's never going to be released. Didn't they say that?
Yeah, you didn't have anybody collecting the data for the October employment numbers. So, this just messes up my whole world. That's and that's the biggest drawback to the government shutdown is I can't do my quantitative analysis on the numbers.
That is the biggest shutdown.
I don't know what to do with myself.
But you lost some data there, but you gained deep insights going forward in how to do value at risk for long premiums. I think we all win at the end of the day, sir. We all win in that scenario. I want to sit in on that presentation. I just love the idea that guy got up there at that conference, and there
was a lot more to it.
I'm sure there was more to it than that, but that is the salient takeaway.
It was just discussing how much more straightforward using options can be, when you're trying, as opposed to diversification.
I do love the next time I get in one of those black cabs in London, I will be disappointed if someone doesn't ask me about a structured product. That will just.
You need to ask them about a Eurostoxx 50 or a FTSE 100 structured product.
Yeah, they'll ask me, how is VStocks versus VIX right now, good sir? I look forward to all that. As I look forward to what's lighting it up out here in VIX land this week. And man, if you were shopping for a banger week in the vol markets and a banger week on the VIX options front, well, then you got what you wanted this week, listeners. An absolutely hot one, yet again, threatening 1 million contracts in VIX as of right now. In fact, they may have even crossed that threshold while we were talking. 990. So we are 10,000 contracts away from it as we speak, listeners. So VIX, once again, looking hot, looking spicy out of the gate like it has pretty much all week. So the ADV is 991. So we are literally almost exactly at that ADV right now. That's up 65,000 a day from this time last week, and it's probably going to keep going up. And we are already pretty much at it again today. So absolutely wild stuff out here. If you were also waiting for something to happen to finally shake our top 10 proprietary VIX TM indicator out of its just 8-2 lethargy that it's been stuck in for, I don't know, 3, 4, 5 months, then this was your huckleberry this week. Some of it, obviously, VIX going the way of the dodo. That also shakes it up a little bit, some OI going off the board. But that combo of the 1-2 punch of VIX going away and also the market's going crazy this week. We now are 6-4 calls over puts. So there are now fully 4 puts to be found in the top 10 right now, which is kind of wild. We haven't seen things that put heavy in some time. So read into that what you will here, listeners. Let's kick it off. Number 10 cost you 210,000 contracts to break into the top 10. That also gets you to a put right out of the gate, the D16 puts. So if you're like me, one of these people out there who's been mocking all the money going to die on the 15 puts, maybe the 16 puts are your huckleberry, followed by number 9, 233,000 of the 17 puts. Maybe you like those better. Number 8, 242 of the Feb 47 half. So there still is some fun upside to be found here, listeners. Number 7, the comparatively reasonable 246,000 of the D's 24s. These are certainly quite reasonable right now. Number 6, 247,000 of the VIX 19 puts in December. So again, a whole D's put strip lighting up our top 10 this week. You can kind of pick your poison. I have a feeling what the other one is, and I think we'll get there in a second. Number 5, 262,000 of the D's 35s. And then number 4, yes, I was correct, listeners. This one's been lighting it up a lot of late. The D's 18 puts, 280,000 of them. They went up for some interesting prices yesterday. So maybe this is the one a lot of people are zeroing in on. Obviously, the highest OI position on the puts right now. Number 3, 328,000 of the D60. So right back to the fun. Number 2, 340,000 of the D's 30s. And number 1 with a bullet, 353,000 of the D's 25 calls. So I will leave it up to you to decide which of those positions is the most, dare I say it, reasonable. But you know, nothing's ever reasonable when we are faced with Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
Mr. Rhoads, I have to say I am impressed. You did your homework this week, and you are across the pond. So you had the dog ate my homework excuse. But nonetheless, you soldiered on, sir. What did you find?
I found, and give me a second, I've been having to shut a bunch of things because I think the Bloomberg and the Flowmaster's Trade Alert software were messing with my audio. So I closing a bunch of things so things go well. All right, Monday. Somebody, and I'm seeing more and more of this type of trade. When VIX was at 2044, somebody bought 500 of the November 26th 14 calls for 525. Break even on that's 1925. I think they've monetized that. There seem to be some exit rates toward. I'm not sure. That darn thing is 11 point. And
oh no! And we lost him completely. Uh-oh! Right as he started doing his weekly rundown, the fish and chips caught up with him, listeners. Well, he is beaming in from across the pond. We shall work to get him back here in the show as we keep on rolling. We'll get back to some VIX. I'm impressed he was able to actually put together some VIX weekly trades, given the fact that he is overseas right now and many hours ahead. But let's get down to a little bit of VIX options business, shall we, as we work to get the once future and present Dr. VIX. Like I said, we are threatening that 1 million contract threshold right now, 991, pretty much right at the ADV as we speak. The hot option out there today, 203,000 of the D's 30 calls, followed by number 2, 193 of the D's 25s. We talked earlier this week about that D's 25-30 vertical going up for, I think, around 37 cents. Looks like they may be taking the other side of it, taking it off right now. And then we fall off a cliff for number 3, 33,000 of the D's 17 puts, followed by number 4, 29,000 of the D's 47 halves, and number 5, 24,000 as well of the Feb 47 halves. So it looks like either a roll or there's OI on both, so they could be closing on both. Mr. Rhoads, sir, have you managed to recover from across the pond?
What is with the world? Who's hacking us?
It's just the Flow Master heard you mentioning his platform, and he sucked up all your.
Hey, okay. All right. Well, there's a trade I was really wanting to get to on Tuesday. Somebody sold 9,000 of the VIX November 26, 20 calls for 275. VIX was at 23.97 at the time. They're like that one makes my it closed at 90 cents, but it just I don't know if they were monetizing that one or if that was a monetization or not. And then on Tuesday as well, VIX a little over 25. Somebody bought 15,000 of the VIX November 26th, 23 calls for $1.95. Those were already 19 cents negative time value on them. We're seeing more call trades like that than I've seen in the past, at least. On Wednesday, somebody, and this is a trade that I'm seeing more and more of. A seller of 400 of the November 26, 37 puts for $16.25. Now, and which is a bullish position. VIX was at 22.45 and the break even is 20.75. So as long as VIX remains above 20.75, they'll make something off of this. And then somebody on the other side on Wednesday sold 1,000 of the November 26, 23 calls for 213. I think that might have been getting out of an earlier week purchase. On Thursday, we had somebody buy the December 3rd 20 calls for $1.61. And then today, probably the most interesting trade, but I think this is an exit as well. Somebody sold 3,000 of the November 26 calls for $1.49. I think that's an exit, and most of the entry trades on that were well below $1. So I think that looked pretty smart as well. One of those big trades from before, I'm pretty certain was an exit. The selling the 9,000 of the VIX November 26, 20 calls at 275. I think they paid 90 cents for them about a week and a half or 2 weeks ago. But that November 26 strike's been coming up an awful lot when I've been talking about weeklies.
We've inspired a little bit of flow. We've obviously inspired that, and we've obviously inspired the meaty put sale on the weeklies. Not quite the 200 puts, but they're getting with some meaty puts. Are you down for that approach, sir? The meaty put sale in VIX?
If you've got that negative time value thing going there, and you expect the market to remain at the levels that it's at, I don't see too much of a problem with that. It's kind of a deviation of that god-awful December 200 put.
It's quite a deviation, but it's a variation on it, yeah.
I can kind of see how I can see some of the logic behind it. But I've seen it. I saw it with the 34. I saw it with the 34s. I saw it with the 35s. I saw it with the 31s. I saw multiple. Usually, when I talk about a trade like that, there are other ones that are very similar that I'm not mentioning due to the inability to be heard the whole time. Plus, I don't want to take up the whole show.
Yeah. I guess I can get behind maybe like the $17 ones. You getting into the 30s. It's getting a little bit more capital intensive. And obviously 200, I've made my views on that quite clear in the past. I don't care what your aim is. There are more capital efficient ways to go about it. But I digress. Well done, sir. You get the bonus. You get the gold star for doing your homework from across the pond, sir. I will not let you rest your voice and your connection as we keep on rolling. We did Friday already. Out to Thursday, listeners. Obviously Thursday, a banger day. Interestingly enough, not the record day for VIX options. If you want to look at the high for VIX options over the past year, it was back on April 4th, about 2.4 million. So I knew it was north of 2 million. I just didn't remember exactly how high. So we didn't quite sniff that on Thursday. 1.61 million. Still an impressive day. That's why I say it was kind of a record in some regards, other regards not so much. SPY definitely was. The S got close, I do believe. But interesting stuff out there. Of that 1.61 million, the hot option out there, about 145,000 of the DEES 18 puts. So again, that's what I was saying earlier. This DEES 18 put seems to be attracting a lot of interest. 65 cents for those yesterday, if you were intrigued. I haven't pulled them up today to see what they're trading for, but maybe an interesting strike if you're down for the downside, but maybe not down for the 15 puts and you don't want to commit all the capital for something north of 20s. And maybe 65 cents in that ballpark for the 18 is a reasonable compromise. That way you're not getting run over for too much if, as all other puts, they tend to go to die. Number 2, 122,000 of the D's 25s. Number 3, 120,000 of the D's 30s. Again, that D's 25-30 vertical. Been trading pretty actively this week. Number 4, 76,000 of the D's 19 puts. And number 5, 73,000 of the D's 20 puts. There could be some put vertical action there as well. But you know my thoughts about $1 verticals in VIX. You know, it's kind of a love your broker trade. Wednesday, 1.4 million contracts on the tape. The hot option out there, 110,000. Again, the D's 18 puts. That's why they are so high in the OI right now. Someone has really lasered in on that strike. By the way, they were going for 77 cents on Wednesday. So you got a better deal on Thursday, listeners. Number 2, 77,000 of the Jan 60s. Number 3, 77,000 as well of the Feb pars. Those were definitely opening, if you're wondering. Number 4, 75,000 of the Jan pars. Those may have not been opening. We'll see. So there is a possibility of a Jan Feb par roll that went up on Wednesday, which would be kind of wild. Or it's just a straight calendar, which is also wild. Either way you want to parse it, or if it's a time stupid, it is also equally wild. All three of those are wild. I don't care how you're carving it up. That there's size OI on both, at least now there are, on both the Jan and the Feb pars. By the way, if you're wondering, 39 cents gets you the Feb pars and 28 cents for the Jan par. Man, that's wild. That's a wild premium level. That's a hell of a covered call if you are so inclined. Out to the number 5, 75,000 of the Feb 60s. It looks like we could have had a Feb 60 par, maybe against a Jan 60 par. It was closing on the Feb, by the way. So interesting, weird stuff out here. Tuesday was kind of the banger day of the week, which may surprise some folks because Thursday was obviously the insane whipsaw day. Tuesday, 2.26 million contracts on the tape. The hot option out there again. Take a guess. Oh, yeah, it's our old pal. The D's 18 puts, 166,000 more going up. On Tuesday, they're going for about 71 cents. So again, this is the strike of the week out here in VIX land. Number 2, 158,000 of the Nove 25s. Number 3, 127,000 of the Nove 35s. Again, going into Nove expiration as well. It's interesting, doubly interesting that a D's put would still take the top spot. So kind of fascinating. Number 4, 103,000 of the D's 16 puts. And number 5, 61,000 of the Nove 30s. Monday, 1.65 million. So pretty much Monday volume-wise actually beating yesterday in the VIX volume perspective. That's kind of wild. I think a lot of people would have had that the other way. 1.65 million on Monday. The big dog on Monday, 96,000 of the Nove 35s. Followed by number 2, 77,000 of the Nove 20 half puts. Number 3, 76,000 of the Nove 25s. Number 4, back to the fun, 76,000 of the Jan 80s. And number 5, 67,000 of the D's 80s. Worth noting, it was definitely opening on the Jan 80s. So we could have had a little D's Jan roll action, which is also just kind of wild out there. By the way, we asked you guys and gals on Monday, D's 30s were dominating the tape for a lot of the early session before this other paper flowed in. They were trading for $1.02. Obviously, it was part of that vertical, but we said straight up D's 30s for $1.02. Does that float your boat or not? And over half of you, 54.5%, said you want to sell them straight up, just naked sell them. And then 27.3% said you want to buy them as part of a vertical. So obviously you want to maybe sell something else. And then about 9% each tie for buyer straight up and sell them as part of a vertical. Mr. Rhoads, I know you were busy looking at VIX weekly trades, but any size VIX regular options prints catch your eye this week? And also, what are your thoughts on apparently someone really backing up the truck this week for the D's 18 puts every day?
Are they buying those puts? I've had to shut every piece of equipment that I use down. So
you're coming at me through a tin can on string right now from London. That was my impression, sir. That was my impression that they were buying them.
Okay, well, I would not. I don't like that. I just there's too much December. There's too many things. First off, as I mentioned before, we're going to be dealing with a slew of economic data. You've got, Trump going after the Fed again. The Fed odds dropped all the way down to 30% this past week for a cut in December. A lot of people haven't been talking about that. Trump apparently jawboned a little bit, and it jumped up to about 45% when he was talking about it. I got interviewed about, do I think he's ruining the Fed's independence? No, I think I went to Memphis State for undergrad, and there was one of the players on the basketball team was in my fraternity, and Larry Finch was the coach, and he would just yell the whole game at them, just yelling constantly. And I go, how do you deal with that? And he goes, he does it in practice too. We just don't even hear it anymore. And I think that there's some of that going on within the market.
You think the Fed just doesn't hear the noise anymore?
I think they're just like, that jackass. It really, sorry guys on the chat. I know I'm not supposed to cuss on here, but I don't really think he has much of an impression. Also, you're beating up a guy that's he's got short timer's disease. Jerome Powell, he's done pretty soon, whether he wants to be or not. His time would be coming up. So I don't pay any attention to Trump saying those things, but it did boost the odds of the cut in December. But those odds going away, and they started going away the morning of the trend down started the day of the October meeting. I looked up and all of a sudden the odds were 87% instead of 99% for the D's cut. So I think that's one reason right there, the volatility around what's going to happen at the last Fed meeting. We're going to get some turnover with respect to the Fed. There's 4 voting members going off, 4 voting members coming on in the first meeting in 2026. So you have to make adjustments on what those people say, and is what they say, is that actually how they're going to vote? Again, we're digesting a lot of economic data in a very short period of time. And then there's a lot of other crap going on in the world. I mean, there's so much going on in the world. I think the Fed odds dropping kind of fell through the cracks because people are so fixated on the Magnificent Seven and if AI is going to make money or not. But you eliminate those from the market, there really hasn't been a whole ton of volatility, but now there's a lot of volatility outside of just that space. And that's why I really don't like, having any sort of short volatility position going into December. If you're trading a seasonal, you're all over it. But we've already talked on this show how this December is shaping up to be seasonally different than what we're used to. So, if every year my G.I. Joe with the Kung Fu grip trade is I have a really nice short VIX position in the D's contract and I make money off that and everybody has a great Christmas at the Rhoads household. I don't think that's working this year. And then the really high priced options that you were talking about, back when after 2008, we started having stress tests for the very large banks, and they would have, in order to pass the stress test, they would buy far out of the money SPX puts on a continuous basis. You'd see these weird open interests and not as extreme as the 80 calls on VIX, but those options were not purchased because they were concerned about a risk or anything else. They were purchased for, non-market outlook reasons. And I wonder if some of these out of the money call purchases in VIX are some of the same thing. Maybe they found a cheaper way they think it's cheaper to pass the stress test. Although stress tests may be going the way of the dodo. It'd be kind of interesting if that happens, just to see if all of a sudden we don't get to talk about those high price calls anymore, or high strike calls anymore.
There you go. Stress test calls, we'll start calling them. Well, you mentioned, fading vol. SVIX, one way a lot of people like to do that. SVIX 17.5 right now. Had a wild week, as you could imagine, getting beaten up earlier this week as VIX cash was soaring. Coming back to life a little bit, 17.5 as of this portion of the show. That's still down 1.5 points from where it was this time last week. You've been saying for a while, maybe aggressively overwrite, or even if you want, just bail on your SVIX. It's been an interesting time to do just that. 7,000 contracts on the tip right now. The ADV is 5,300. That's up about 100. So hopefully this volume will continue and we'll see that ADV continue to climb. And then Russell's favorite, UVIX, 11 3/4, up about 1.5 points. So funny how that works. SVIX down 1.5, UVIX up 1.5 on the week. It's almost like they're somehow related products. 60,000 contracts on the tape today for UVIX. The ADV is 46,000. It's already blowing that away. Mr. Rhoads, I know you always like to carry a little SVIX in your back pocket. You said you're not going to do your vol fade in December. Does that mean you're washing your hands of SVIX in December as well?
I've got a quarter position in SVIX. I sold calls, and it's not going to be called away this week. But I'm not going to be as upset if the final ones get called away. And this probably ruins all of my credibility for the next 5 weeks. But I think I'm going completely flat until next year.
Oh, not even the weekend UVIX trade
I mean, really just I'll probably continue to do the UVIX thing on the weekends because, just when I do something systematically, I keep up with it like that. But sometimes it's not so bad to step away for a little while. And as goofy as things are right now, I'm going to take a step back. There's also some systematic things with respect to block trades I want to start implementing in 2026. And you and I will talk about that. You don't know this yet, but you and I are going to talk about that in early 2026 on a pro.
Ooh, I am excited, sir, as we keep on rolling.
I can see it.
As we keep on rolling. I'm just crunching all the numbers for the end of the show.
I know.
I'm always crunching data here on Vol Views, including crunching a kind of a wild number for everyone's favorite. I know your favorite, UVXY. If you loaded up your UVXY today and you're like, WTF, it's because they did a 5-for-1 reverse split, listeners. So that's why it was trading. It was at a 62.25 as we're kicking off the show. But once these products get north of 40, all bets are off, and they get kind of wild, listeners. So right now it's at about a 59.80. So it's already given up, over 2.5 points just since the start of the show. So the vol starting to come back to earth a little bit, at least for today. 60,000 contracts on the tape today. ADV is 118. I wouldn't be surprised to see that come back to earth a bit as well. Whenever we have these reverse splits, it always tends to gum up the volume for a little bit as everyone's trying to figure out what the hell do I trade now? And then VXX 3760 up about almost 3 points, about 2.8 points from where it was this time last week. Let's see if I re-rack that right now. It has given up about half a point of that from the start of the show. So it's at about a 37.10 right now. So that puts that up about 2.3 points from where it was this time last week. Putting up at the start of the show, it had put up about 56,000. It's up to about 65,000 contracts, which is decent flow for VXX. Its ADV is only 41,000 contracts, even though that's up about 4,000 from this time last week. So Mr. Rhoads, any thoughts on the big UVXY reverse split? I guess now the question is, when will we see UVIX follow suit? If past is prologue, it won't be for a long time. They got to get down to about a 2 before they reverse split that thing. And anything else catching your eye in the world of vol ETP, sir?
With respect to those reverse splits, I'd like to find out what the cost is to the funds. And I know who to ask, and you know who to ask, but I'm really curious about that because if it's a low cost process, it seems to me you would want to do it a little bit more frequently than they do it. But if it costs you something, then maybe you do 10-for-1 instead of 5-for-1. I don't know. And then on the UVXY, year to date, the buying for the weekend is flat after last weekend.
Oh,
so it has had drawdowns before. I'm sticking with it until, I don't know when I'm going to stick with it till, but I'm sticking with it for a while.
And listeners, we are sticking with the madness as we head on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, as we're diving into the crystal ball, we'll give you a quick snapshot of where we're hanging out in the markets right now. Still looking pretty firmly bullish out there. And all the major indices now kind of moving in lockstep, which is kind of interesting from a percentage perspective. They were all kind of doing their own thing to different degrees at the start of the show. Now they're all up almost exactly 1 2/3% each, which is kind of wild across the board. And our old pal VIX Cash coming back to earth a little bit. At the start of the show, we were at 23 3/4. That puts us up 4 points on the week as we're coming into the end of the show. Right at about a 22.90. Let me just re-rack that again really quickly. It's ticked up, 22.96. So it's moving in the wrong direction for me. I was at a 22.35, so I was about 0.6 points away. So no joy for me this week, even though I was the closest. The meatball was doing his palindromic fade at 1991. No joy there. And then Mr. Rhoads was hanging out at, or I should say Gretchen was hanging out at 2035. So no joy for her either. Both of them feeling the vol fade, or should I say more accurately, maybe not feeling the mega vol spike that we got this week. I was feeling it, just obviously not enough. I needed another 0.6 of a point. So close, but no cigar for me this week, Mr. Rhoads. So I'll be nice. I'll let you and Gretchen go first this week. What are you feeling, sir?
Well, Gretchen is about as silly as Mark Sebastian. Gretchen has spit out 23.45.
Oh. Is Gretchen getting put bombed or something? What's going on out there?
I don't know, but that's the number. I put the number in, it comes out. I had to do it by hand, though, because if I use my calculator, you won't be able to hear me.
Ah. That's true. It will knock you off.
Laugh at it. There's nothing else we can do about it.
It will knock you offline again. Now, here's the question. Will we still be juicy this time next week? I'm going to say a little bit spicier then. I'm going to say 24-33 for this time next week. So I'm feeling a little bit of spice next week. Clearly, Gretchen is too. I see some 19 handles in our chat. A bunch of 19 handles, actually. Oh, Frank's got a 20 and a quarter. 19.8, a lot of 19 handles. A lot of folks are feeling the vol fade. What are you feeling out there, listeners? Hit us up. Let us know. Ad options on most major social media platforms. Questions at theoptionsinsider.com also works. Get them in today. Get them in show day. It's the only way to be fair for everybody. And then if you are within our margin of victory, you can play along in the home game, and you too can win fabulous prizes. Maybe one of those prizes can be a complete tour of Gretchen.
The secret sauce that is Gretchen's formula.
I don't think Mr. Rhoads is ready to reveal that to the world yet. But Mr. Rhoads, you get bonus points for being the beam in guy today. Before you go off and resume your fish and chips journey, or perhaps go to bed.
It's only 7. We're going to dinner in a minute, and then that's that for that.
What's the hot dinner scene in London? Give us the lowdown.
Pizza and burgers. We're boring.
Pizza in London is no bueno, so you don't want to have pizza.
I know. No, we haven't done. Did we go anywhere nice for dinner?
Get some sweet curry.
No, she really has not had a good time on this trip.
Oh, well, 4 days at a quant
We've
conference.
Had a great time.
4 days at a quant conference for your anniversary. What a mystery that she wouldn't have a great time.
She enjoyed it. She had a great time.
Well, before we let you go, resume your anniversary vacation. If folks want to keep up with all your vol musings, or maybe pester you about what goes into Gretchen, where should they go? What should they do?
Hit me up on Twitter. That's just the easiest way to find me. If you really need to get my attention, you can find me at the IU business. If you Google IU Kelley and my name, you'll find all my contact information as well. The block trading thing, we finally finished all the update on it, and we had done 2022 and 2023. We just finished 2024. The output's a little bit different than we saw in 2022 and 2023. That paper should go up sometime next week. And I'm going to toot my own horn. That paper was one of the top 10 downloaded papers at SSRN in my category last month. Yeah, over the last 30 days or something.
There you go. Hot stuff, sir. Setting the vol world on fire out there. I just was reminded, actually, next Friday is Black Friday. So the day after, it's a shortened session. And I might have to attend a high school playoff football game on that day. So I don't think I will be able to record next Friday. I think there's a good chance, sir, we will be So do you want to prognosticate now for 2 weeks as well? Should we be that bold? Just in case?
I'm sticking with my number.
All right, you're sticking with it. We'll keep these here.
I'll tell you why I'm sticking with the number.
For 2 weeks? You're doing it for 2 weeks as well? Is it going to apply for 2 weeks?
Well, if I'm right in a week, the number would be very similar in 2 weeks. Because we're pretty close to 2345 right now anyway.
My 2 week number.
It works for 2 weeks without tweaking the model. But I will create a 2 week model.
My 2 week number is going to come down to earth a little bit. It's going to be a 2172. So there you go. Listen, get your 2 week prognostication in. I think there's a good chance. Well, we'll see how the playoff game goes this week. If they win this week, I probably will be spoken for next Friday. So we shall see out there. Listen, that is going to do it for us on the on-demand side, at least for the Vol Views crowd. If you're hanging out in the pro, just hang out. Get your 2 week predictions in as well. You can play along with me and Russell and the fool's errand that is predicting Vol for 2 weeks. And then join us in a few minutes for Options Oddity. Should be a fun one. If you haven't checked out the pro yet, what are you doing? TheOptionsInsider.com/pro is the place to go to learn more. Then we're back to wrap up the entire day for everybody with one final hot options report for the week. Then we're back again on Monday to kick things off with the option block. Probably not going to be a show next Friday, so back again in 2 weeks. Another episode of Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.